Hi everyone. This will be the continuation of my previous lesson, the financial statements. We have done an introduction part in the first video, and this video will show you how to prepare a profit or loss statement. Here, first I will like to pay your attention towards the two financial statements prepared by a sole proprietorship business. The first one, as I mentioned you earlier, is the profit or loss statement. And the second statement will be the statement of financial position. So the main objective of preparing the profit or loss statement is to show the profit or loss earned by the business during a period. Or we can also name this as, or the objective will be to show the operational results of the business during the period. When you consider a business, the main operation will be the buying and selling process. So, to get a good idea about the performances of the business and thereby to see whether you have earned a profit or loss, mainly a business will be preparing the profit or loss statement. And when they are preparing the profit or loss statement, they'll be using incomes and expenses balances to calculate the profit or loss or the operational result. The profit or loss of a business will be performed in two steps at the preparation of the statement. The first one is the calculation of gross profit, and the second one will be the calculation of net profit. And the profit or loss statement will show you the performances of the business during the accounting period or the financial period. When we move on to the statement of financial position, the main objective of preparing the statement will be to show the financial position of the business as it is mentioned in the name itself. This financial position of the business means, in simple terms, that means the financial strength and ability of a business. At the time of preparing the statement of financial position, a business will be using its assets, liabilities, and equity balances. The financial position will be performed by equating the total value of assets to the value of equity and liabilities of the business. And normally, this statement of financial position will be prepared at a particular time of a business. It's like a snapshot. I mean, as and when it is needed, you can prepare a financial position or the profit or loss statement, both the statements, but normally we will be preparing, or a business will be preparing the statement at the end of the period as at the last date of it. From using the same slide, I like to pay your attention towards the differences of these two statements, which you can also be tested at the O-level examination paper. The main objective of preparing a profit or loss statement, as I told you earlier, will be to show the operational results, or from the word itself, to identify the profit or loss earned by a business during a period. The statement of financial position will be prepared to show the financial position of the business. The second point, or the second difference will be the profit or loss statement will be prepared using the incomes and expenses balances, whereas the statement of financial position will be prepared using assets, liabilities, and equity balances. The profit or loss of the business will be calculated in two parts, as the gross profit and the net profit. And in the statement of financial position, that is done by equating the total value of assets of the business to the equities and the liabilities of the business. Profit or loss statement is prepared to show the performances during the period, but the statement of financial position will show the financial position of a business at a particular time period or a particular point of time. Okay, let's move on to the preparation of profit or loss statement. Okay, this is the standard format that the exam is expecting from you all at the examination paper. And there's no choice. You have to stick to this format and you have to by heart this format. This is, at a glance, you will find it a little bit difficult, but when you're taking it with an understanding, it won't be difficult. I'll help you in doing that. So the first part, there will be 3 columns. And here we will be writing the description, kind of. The first item in the profit or loss statement will be the sales figure, which we are going to show under the third column. Then the term cost of sales comes, thereby the new key concepts that we have to learn is coming, that is opening stock, purchases, loading expenses, carriage inwards, cost of goods to be sold, closing stock, and the cost of sales, and thereby we'll end up with the gross profit. So as I mentioned earlier, the profit or loss statement will be preparing in 2 steps. First one is up to the gross profit, and the second part will be from here to here, the calculation of net profit. So when we are preparing the preparing the profit or loss statement, the calculation of gross profit we'll be doing like this. As you all know, what do you mean by the profit, or how can we calculate the profit? The revenue or the total income that you have earned out of something minus the expenses, total expenses that you have spent. In order to do that, will give you a profit or a loss. Revenue means in simple terms that is the income. So if the total revenue is greater than the total expenses or the cost that you have to spend with regard to a business, you will end up with a positive figure, and that will be known as the profit. That is the main objective of a business. Always the businesses are operating with an intention of earning profits, not the losses. So always then their attempt is to earn a higher income than their expenses. So then there can be situations where they are earning losses as well. If their total income or the revenue is less than the expenses. Vice versa, if the expenses are higher than the revenue figure, you'll end up with a negative figure, and that will be known as the loss. But here, I like to pay your attention towards the calculation of gross profit. That is the difference between the sales and the cost of sales. So let's see what these sales and the cost of sales are. Sales revenue will be the total of cash sales and credit sales done during an accounting period. As you all already know, practically in a business, there can be cash sales as well as credit sales. So here I have taken an example like this. In the accounting period of 1st January 2019 to 31st December 2019, credit sales of a business for the year ended 31st December 2019 was 60,000 and cash sales was 40,000. Therefore, the total sales of the business will be 100,000. So that is very, very easy. The total sales comprises of, or the sales revenue will comprises of the cash sales and the total of cash sales and the credit sales. So here I have given you these relationships in mathematical forms as equations, which will help you to get a good knowledge about this. So gross profit is always the difference between the total sales minus the cost of sales. Now you know what the total sales are. Here again it can be shown like this. Total sales is the total of cash sales and the credit sales. Then we'll move on to the next one, cost of sales, the next concept, cost of sales. Once the entire stock is sold out, the cost of the stock or the inventories that was presented for trade is called cost of sales. So stocks, for stocks, another name will be the inventories. Actually, what do you mean by a stock of a business? If you are selling fruits, your stock will be the fruits which you have in your business. If you are selling motor car trading business, the motor cars will be the stock of yours. If it is a furniture shop, if you are running a furniture business, so the furniture will be the stock of yours or the inventories of yours. Okay, so then again, once the entire stock is sold out, the cost of stocks that was presented for trade is called cost of sales. When it comes to the profit or loss statement, as you can see, the cost of sales will comprises of opening stock, purchases, loading expenses, carriage inwards, and thereby you will end up with a figure called cost of goods to be sold. Actually, that is the cost that you have already been ready to sell. The cost of the goods that you are already been ready to sold. So out of that, when you deduct or less the remaining stock of the business, you will end up with the figure called cost of sales. So thereby, I'll try to give you further knowledge through this example. We'll use the same example, and from the early example, we'll be using the sales income like this. To earn a sales income of 100,000, the business has already incurred 75,000 as cost of sales in 2019. And they have been already considered the following figures. Stocks remain at 31st December 2018, which is the last year, as the opening stock, which is 20,000 rupees, and purchases during the period, 50,000, loading expenses of 4,000, and carriage inwards of 6,000. So In my earlier video, I have shown you the importance of identifying the accounting period. So in this sum also, we have to get an idea about the accounting period first. So here they said, the sum says, the accounting period of in the accounting period of 1st January 2019 to 31st December 2019. So from there you can get a hint about the accounting period. So the accounting period will be starting from 1st January 2019 and it will go up to 31st December 2019, which consists of 12 months. So in that period, to earn a sales income of 100,000 rupees, that means during the accounting period of 2019, the business has earned or incurred, the business has spent or incurred 75,000 rupees. So actually, the gross profit will be the difference of these two figures. So let's see how we have ended up with this figure, 75,000. In mathematical form, cost of sales will be calculated by adding the opening stocks of a business to the total purchases of the business and the loading expenses plus the carriage inwards, and from that you have to less or take away the closing stocks of the business. Thereby you will end up with the figure called cost of sales. Opening stock plus total purchases plus loading expenses plus carriage inwards minus closing stocks will give you the figure called cost of sales. Okay. So I know this is new to you. Stocks remain at 31st December 2018, which means the previous accounting period or the last year. How it becomes the opening stock of this year? We'll look into that matter like this. So our accounting period starts from 1st January 2019 and it will end up after 12 months of 31st December 2019. So when it starts the 1st January of 2019, practically in a business which has a continued existence can have some stocks which has been remained during the previous accounting period. It's like this. Now, our accounting period starts from 1st January 2019 to 31st December 2019. But before that, there will be another accounting period which ends up with 31st December 2018. So the stocks which has been remained in their stores last year, that means in 2018, will become the opening stock of the new accounting period of year 2000, accounting period of 2019. Further, if I give you a brief discussion, brief explanation, practically in a business, there can be there will be a stock, and due to different reasons they won't be able or they are not in a position to sold the whole stock that they have purchased during the accounting period in the same accounting period. So at that time they will be using them in the beginning of the next accounting period, and that will be the opening stock of the accounting period that we are considering. Again, as an example, let's say a business who's selling bicycles. Let's say they have purchased 100 bicycles in the accounting period of 2018. So after purchasing 100 bicycles, at the end of 31st December 2018, they have ended up with 5 bicycles remaining in their stores. So what can they do with that? Think practically. So that will be or that can be sold out in the next accounting period. That means in 2019, the accounting period which starts from 1st January 2019. So that the same 5 bicycles which is remain as closing stocks in 2018 will become the opening stock of 2019. Right. But then how are we going to treat it as from the business's point of view? This closing stock of a business will be treated as a current asset of the business until we are selling them in the new accounting period. We will be keeping them or they will be remaining in our stocks, and that will be treated as a current asset because when the new financial year or the new accounting year starts, the value of the assets are going to be changed very soon. So therefore, it will be treated as a current asset. Again, sometimes there cannot be any closing stocks in the business if they sold out all during the accounting period. As I mentioned in the early example, if a business purchased 100 bicycles during the accounting period ending 2018, if they are in a position to sold all 100 bicycles, there can't be any opening balance in the accounting period which starts from 1st January 2019. That's also possible. And at the exam also, they can be given sums like that with opening stocks or without opening stocks. That is possible. Okay. Then that's what you mean by stocks remain at 31st December 2018, which is the last year, and that will become the opening stock of this accounting period, 1st January, it starts from 1st January 2019 to 31st December 2019. Okay. So when you are calculating the cost of sales, we are going to consider that opening stock as well. Then what these purchases are. As I told you earlier, the purchases or the total purchases also comprises of credit purchases and cash purchases. So when you are going to show the cost of sales or when you're calculating the cost of sales figure, you have to treat or you have to consider the opening stocks as well as these purchases, which comprises of cash purchases plus credit purchases. Okay. Then this purchases figure of a business includes the loss incurred in bringing stocks into the current position and should be considered in the preparation of financial statements. That means when you are buying stocks during an accounting period, there can be expenses which is very hard and fast to differentiate from the purchases, like loading and unloading expenses of stocks or the purchases, carriage inwards, the transportation cost. All these must be taken into consideration. Practically, let's say we are importing some vehicles from a motor car trading business who's trading the motor cars, buying and selling motor cars. The main business will be buying and selling of motor cars. So when they are going to import a stock of motor vehicles from Japan, first they have to bring them down to the port, and from there they have to bring them down to their business premises. So until then they have to spend different expenses, loading and unloading at the port, and then from the port to the business premises they have to again transport it. So the transportation cost and other labor charges, all these will be has to be considered. Otherwise you will end up with a wrong profit. So thereby these losses incurred will be treated as expenses and we'll be considering them at the preparation of cost of sales. Okay. So thereby cost of sales again is once the entire stock is sold out, the cost of stocks that was presented for trade is cost of sales. Only the stock that was presented for trade must be considered. Then at that time, we have to consider about these closing stocks during the period as well. This 5,000 rupees includes the closing stocks during this accounting period. Our accounting period started from 1st of January 2019 and it will go up to 31st December 2019. This is the stocks remain at the last year, which will be the opening stock. We can also name it as the stock as at 1st January 2019. When you are working out more sums in future, you will get the figure, get this opening stock figure like that sometimes. Without using the word opening stock, they will use it as the stock as at 1st January 2019. That is the opening stock. But here, I am paying your attention towards the closing stock. The stock which is going to be remained during 31st December 2019 in the business. And that will be 5,000 according to this example. So if we didn't consider, if we are not deducting this from the figure cost of goods to be sold, it's giving a wrong impression about the business to the stakeholders or the interested parties. So thereby from this cost of goods to be sold, out of that you have to deduct or less the closing stock which is remaining in the business during the considered accounting period. Thereby only you will end up with the proper figure of cost of sales, which is going to be 75,000 according to my example. So thereby the difference between the sales and the cost of sales will give you the gross profit of the business. The difference between the sales and the cost of sales will give you the gross profit. Actually, what do you mean by that? To earn 100,000 of a sales income, to earn and sales income of 100,000 rupees, according to this example, according to my example, the business has incurred already 75,000 rupees and they have end up with a difference or a profit of 25,000 rupees. It is shown here. This is the calculation of gross profit for the year ended 31st December 2019. So the sales figure will be 100,000. From that, when we are going to deduct the cost of sales, the opening stock is 20,000. The total purchases will be 50,000 during the period. Loading expenses 4,000. Carriage inwards 6,000. And thereby, when you add all these figures together, you will end up with 80,000 rupees, which is known as the cost of goods to be sold. Cost of goods to be sold. We are ready to. We have already incurred 80,000 rupees worth of stocks, but practically we were unable to sold 5,000 worth of stocks during the accounting period. So once you deduct that, you will end up with the true figure of cost of sales of 75,000, and thereby the difference of 100,000 and 75,000 will end up with a gross profit of 25,000 rupees. Then, when it comes to the mathematical equation, cost of sales comprises of opening stocks plus total purchases plus loading expenses plus carriage inwards, and from that you have to deduct or take away the closing stock which is remaining, and thereby you'll end up with cost of sales. So total purchases comprises of credit purchases plus cash purchases. That's how you are going to prepare the first part of the profit or loss statement up to the gross profit, and then we'll move on to the calculation of net profit. As I mentioned you, we'll move on to the calculation of net profit, the second part of the profit or loss statement. There we will be using the incomes and expenses, as I explained to you earlier. So we must know what is incomes and expenses. Before that, why two profits like gross and a net? Now, it's like this. Practically, when you consider a business, some expenses, the expenses which are directly goes with the sales will be calculated under the up to the point of gross profit. But practically in a business, there can be some other incomes and expenses which are not directly related to the businesses or the buying and selling process, but they are also to be considered at the time of calculating the true profit or the actual profit of a business. Now, I have got the example of a motor car selling business. So they are the expenses that they have to incur in terms of, let's say, in terms of the operation of the business. Like there should be some people to or some staff to handle the business. At that time, they have to do the accounting part. So there can be an office premises. So there will be some administration staff doing this accounting and all this paperwork. And you need different kind of stationaries to conduct the business. Then again, you will be doing advertising in order to advertise about your motor car selling business in order to get an awareness of your motor car business to the general public. So you have to do different kinds of publicity, which is known as advertising. Again, when you are running short of money, the businesses must get financial assistance from the financial institutions like commercial banks and other financial companies. So at that time, you have to, once you obtain loans out of them, you have to pay interest on behalf of the loans that you have obtained. So all these things will be considered as indirect expenses to the selling of motor cars. So these expenses also must be considered when you are calculating your profit. This 25,000 of the earlier slide, this 25,000, that's why we are naming this 25,000 as the gross profit. This is not the actual profit. Inside this, there are some other incomes and expenses which you have already incurred. So they also must be taken into account when you are preparing the financial statements, because the stakeholders are waiting to get a proper impression, a true impression or an actual impression about the business. Okay, so thereby it's our duty to show the actual profit or the true profit. So thereby we are going to do some adjustments to this gross profit. Then that's why we are calculating the net profit by considering the other incomes and expenses. Okay, I think now you have got a rough idea about the expenses. When it comes to the other incomes, not the direct income, the main income or the direct income of a business will be the income that you are earning out of sales. The main expense of a business will be the value of the purchases, the cost that you have already incurred on behalf of purchases. But other than that, there can be expenses that I have explained to you and incomes as well. Let's see what these incomes are. They will be, now, other than the motor car trading business, you must be having some extra building somewhere. So without keeping it idling, you can rent it out for someone and you can earn an income out of that. So that also comes to your pocket, to your business. So that's an indirect income to the motor car business. From the profit that you have earned, you must have started or you must have invested in a fixed deposit. You must have invested in a fixed deposit. So from the fixed deposit, you will be earning an income of interest income. So that also yours. If you have, in the same way, if you have invested in the stock market, so you will earn a dividend income. Sometimes from the businesses, you will be able to earn a commission income. All these are other indirect incomes which you will be able to earn as a business. So when we are ending up with the year-end operational results or the profit or loss, these things also must be considered as a prudent person, as a prudent business, in order to show the proper accounts to the stakeholders. Okay, thereby let's see what these incomes are. You all have done all these terms in grade 10, but I like to pay your attention again to give or to brush up your knowledge here too. So this incomes means the increase in equity other than the introduction of capital by owners. Increase in equity other than the introduction of capital by owners. Other than the additional capital, if you can see an increase in your equity, or the ownership, that will be known as an income. All other incomes not included in gross profit is regulated as other incomes. So, as example, interest incomes, dividend income, rent income, commission income, all these can be treated as incomes. Then what are the expenses? What do you mean by the term expenses? Decrease in equity. Decrease in equity other than drawings of the owner are considered as expenses. You know what the drawings are. If the owner is taking assets of the business, it can be in terms of cash or in terms of stocks. If the owner is using them for the private use, they will be considered as drawings. So then decrease in equity or the ownership other than drawings are considered as expenses. So as I mentioned you earlier, if you are running an office premises or even the motor car sale at night, you need electricity. To charge the vehicles, you need electricity. So for different purposes, there should be electricity. So at the end of the month, you have to pay electricity bills. Then if in order to reduce the risk of doing the motor car selling business, in order to reduce the risk, you have to start up some insurance coverages. So thereby, insurance expense also you have to incur. Then rent payment. If you are not operating your business in your own premises, if you have rented a place, for that you have to pay a rent. So all these are expenses. So like that, there can be so many expenses, like telephone expenses, advertising, operational staff salaries, administration expenses, distribution vehicle depreciation, bad debts, so many, which we will be come across when we are proceeding with the lesson. Then for controlling purposes, at the time of preparing financial statements, we'll be categorizing these expenses into 4 parts. This is mainly for controlling purposes. So thereby, the expenses will be categorized as distribution expenses, administration expenses, financial expenses, and other. So distribution means when you are selling the stocks, the expenses which are involving with regard to distribution, all the expenses will be considered as distribution. Administration means at the time of administering the business, controlling the business, supervising, managing the business, all these things comes under administration. As I told you earlier, there can be some financial assistance we have to take from the financial institutions like commercial banks and other financial institutions. At that time, you have to bear some expenses, so they will be known as financial expenses, like interest on bank loan, interest on overdraft facilities. If you are maintaining a bank account, actually a current account or demand deposit with the bank, then checkbook charges, bank charges, all these are known as financial expenses. Any other expense, any other losses due to natural disasters, and a good example, the prevailing situation in the world due to pandemics and uncontrollable situations, there can be losses that has to be bared by the businesses. So they also can be considered as expenses, and they will be treated under the heading of other expenses. So like that, the expenses will be comes under 4 categories when you are preparing the financial statement, especially the profit or loss statement. This is the second part, or actually calculation of net profit. Up to here, now you have a proper idea. Now I'm talking about from here to here, how we are going to proceed. So here you will get the gross profit. For that, you have to add the other incomes like rent income, interest income, and discount received. Then you have to get the total income of the business, and from that you have to deduct the other expenses. So at that time, you can categorize them and show. At the exams, they are expecting you to have a proper understanding about the different types of expenses, about this categorization. And under each heading, you have to, under the correct heading, you have to list out your expenses. So under distribution here, they have given advertising expenses, salaries for sales personnel. That means for the people who are, or the employees who are assisting for selling the stock. Discounts, sometimes we are giving discounts. So at that time, that will also must be treated as an expense. Bad debts, another expense. When you sold on credit, there will be debtors. When the debtors are unable to recover by the business, we will be treating them as bad debts. I will give you an idea about this when it comes to the next lesson. Then depreciation for distribution vehicles. There will be a lot of vehicles we are using for different purposes in a business. So here, let's say the lorries and the other vehicles, vans and stuffs that we are using for distribution purposes of goods, they also must get wear and tear during the accounting period. We have to account for these wear and tear also. Otherwise, our profit will be a wrong one. So therefore, that also can be treated as an expense. Distribution vehicles comes under distribution expenses. Then administration expenses under that, electricity, insurance, salaries for administration staff, telephone expenses, depreciation for machinery. There can be some machines like photocopy machines, fax machines, and other kind of machines, computers and all. So they also are wear and tear during the accounting period. For them also you have to calculate when you are preparing the profit or loss statement. Then the other expenses, losses from cash frauds. There can be frauds, there can be natural disasters, and there can be pandemics like COVID-19, which are beyond your control, beyond the business's control. So for such things also you have to keep accounts for stocks write-off. Then financial expenses like interest on bank loan, interest on bank overdraft, and bank charges. So they will be taken as totals, and then the whole set of expenses will be taken as one figure. And from the total income, once you deduct the total expenses, you will end up with the net profit of the business. Net profit after deducting the indirect, after treating the indirect incomes and expenses of the business, you will end up with the net profit, actually, which will be transferring to the capital account. I'll show you that later. So profit or loss statement is prepared in 2 steps. First one, calculation of gross profit. There we are mainly dealing with the sales and the purchases. And after that, with the calculation of net profit, the second approach, there we have to consider each and every income and expense elements that are indirectly dealing with the operations of the business, and we have to keep account or take them into consideration when we are accounting for them. Then for the gross profit, we'll be adding the other incomes, thereby you will get the total income of the business. From that, you have to deduct the total expenses, and thereby you will end up with the net profit. So once you categorize the expenses like this, you can you have a control, or you can control the expenses, distribution expenses. You can control and see what that figure is. If you are in a position, you can control the administration expenses, and you will be able to earn a higher profit, as well as the financial and other too. This is the continuation of the previous gross profit calculation. This is the data related to that. Balances of Sadev's business for the year ended 31st December 2019 as follows. Our accounting period starts from 1st January 2019 and it will end up to 31st December 2019. So during that period, we have earned a gross profit of 25,000. These are the other incomes and expenses that they have been incurred and earned. Interest income 2,000, rent income 5,000, salaries of sales staff 10,000, which is going to be an expense, advertising expenses of 1,000, bad debts 500, depreciation of distribution vehicles 1,500, electricity expense 2,000, telephone charges 2,000, insurance another 1,000, salary administration 3,000, interest on bank loan 1,000, interest on bank overdraft 500, and bank charges of 500 rupees. Okay, so this is how we are going to calculate it in the standard format. So this is a continuation of the other of the previous statement. So gross profit up to there, I hope you can remember. So gross profit comes from there. For that, we are going to add other incomes. Interest income will be 2,000 and the rent income will be 5,000. So we will be taking this as the total 7,000. And for the gross profit, when you add all the other indirect incomes, you will be ending up with 32,000, which is going to be the total income of the business. Then from that, we are going to less all the expenses. Here they have, according to the sum, we have distribution expenses, administration and financial expenses only. So if you need, you can have another category like other expenses, or you can continue it as you can combine it as financial and other expenses and show as another category. So under distribution expenses, salaries for sales staffs comes under distribution, which is going to be 10,000, and advertising expenses of 1,000, again, which will help to distribute the stocks of the business. Bad debts of 500, and the depreciation for distribution vehicle 1,500, and thereby 12,000 rupees will be the distribution expenses of the business. Then under administration expenses, electricity of 2,000, telephone charges of 2,000, insurance 1,000, salary for administration staff will be 3,000, So thereby the total will be 8,000. The total administration expenses will be 8,000. Financial expenses, under that interest on bank loan 1,000, interest on bank overdraft 500, and bank charges 500, which will give you a total of 2,000. So when you get the total of distribution expenses 12,000, administration 8,000, and financial expenses of 2,000, it will become 30,000 rupees, which is the total expenses. So from the total income of the business, when you deduct the total expenses of the business, you will end up with an actual profit or a net profit of 2,000 rupees, which is going to be transferred to the capital account at the end of the accounting period. And this figure, this 2,000, which is transferred to the capital account, will be taken to the statement of financial position. I'll show you in the next slide how we are going to keep accounting for that. So I hope you have a good understanding about this preparation of the profit or loss statement. I like to pay your attention more towards the format when we are doing a full sum again. So this is the format. Now you have learned the whole format now. Again, when in a sum, when you were given the name of the business, you have to start up the sum like this. This will be the format. You have to take a one full page and deduct and divide it into 3 like this. And it's very, very important to mention the rupees on top of each column. And this wording, again, you have to buy hard. Let's say now here, if the business is Sadev, you have to say business of Sadev profit or loss statement for the year ended 31st December 2019, according to our example. So thereby, sales will be the first figure. From that, you have to less cost of sales. I hope you have a better understanding about the things which comes under cost of sales. You have to treat the opening stock, purchases, loading, carriage inwards. If there are any other expenses which goes along with the purchases, you have to consider all of them. And you have to arrive at the figure called cost of goods to be sold. And from that, you have to deduct the closing stock. And thereby, you will end up with the cost of sales. And it will show you the gross profit. For that, you have to add the other incomes of the business, and thereby you will get the total income of the business. And from that, you have to less the 4 types of expenses, and you have to consider it as one figure, one expense figure. And from the total income, once you deduct the total expenses, you will end up with the net profit of the business, which you are going to transfer for the capital account. So which I have shown in dark blue. The wordings that I have given in dark blue is very, very important, and they are the key wordings that you have to by heart at the time of preparing the profit or loss statement. Then, as you can see, anything which you want to deduct, any figure which you want to less or deduct, you have to show them using within brackets all the figures that you are going to less. That is according to the double entry principle. Earlier, the format was different. Now, in order to understand by any person, a person even without a knowledge of accounting, can understand when we were given it like this, or the positive figures like this, and when the negative, the things that we have to less by using within brackets. Okay, that's it for today. In my next slide, I will show you how to prepare the statement of financial position, the formatting and the structure of it. I think now you have a clear-cut idea about the structure of the statement of profit or loss statement. If you learned something new, please subscribe to my channel and like my video. Bye. Thank you very much.